What's up, guys, and welcome back to another I Know First stock forecast. We've created an artificial intelligence predictive algorithm that forecasts the stock market on a daily basis. Our goal is to find the best investment opportunities and beat the stock market. Today, we will be showing you guys one of our many artificial intelligence investing strategies that is being used by some of our institutional clients. Let's start things off with two example forecasts. Here, we had a short-term, 3-day forecast that went long. Our AI was able to find the best stocks to buy even though the market is in a spiral. Our average return tripled that of the S&P 500's return. Here we have another long forecast, but this forecast is special. This was a 1-month ETF forecast, which the S&P 500 went down over 4%. Our AI algorithm is not only able to find the best ETF to buy in a bad market, but was able to find the best ETF among all the regions. In this forecast, EWP, which is the Spain ETF, had the best returns, in which it went up close to 8.5%. Our AI is not constrained to just the US market, but is also prepared to find the best assets to buy from all the different regions in the world, maximizing profits. Before we go further, we need to make sure everyone knows about the GICS Level 1 and GICS Level 2 sectors that the market is composed of. The GICS Level 1 sectors are the main 11 sectors that the market is made up of. These include energy, materials, industrials, and consumer discretionary, just to name a few. Then we have the GICS Level 2 sectors. These GICS Level 2 are all subsectors of the GICS Level 1, so every single GICS Level 2 sector falls into one of the GICS Level 1. For example, the XSD, which is the semiconductor sector, is a part of the technology GICS Level 1 sector, so in short, the GICS Level 2 are subsectors of the GICS Level 1. I Know First has created a combined long-only strategy. The way this AI-powered strategy works is as follows. First, the strategy is split into 4 sections. 60% of the portfolio goes to the 3 best GICS Level 1 sectors. Then, 20% of the portfolio goes to the 5 best S&P 500 stocks allocated by the algorithm. Next, 10% of the portfolio goes to the 2 best GICS Level 2 sectors. And lastly, the last 10% goes into either the SPY or S&P 500. Every month, there is a rebalancing where the AI will do a rebalancing of the portfolio. The reason why this strategy is called the combined long-only strategy is because it works only for going long in the market. So, if the AI sees the market is negative at a monthly rebalancing, we take 80% of the portfolio and put it into the SPY and keep the other 20% in cash. We do weekly checks to see if we should take the 20% cash we have and put it into the SPY or continue to keep the cash. Here is the performance of the strategy from January 2020 until December 31st, 2024 compared to the S&P 500. I Know First returned 197%, while the S&P 500 only returned 82% in 5 years, resulting in I Know First outperforming the S&P 500 by 115.12%. These numbers are real results and not just backtesties results. Here are the yearly results from this I Know First strategy versus the S&P 500. It shows the yearly returns, the max drawdowns, the annualized Sharpe ratio, and the Sortino ratio. Today we are going to be looking at our October portfolio. Our entry date for this monthly rebalancing of the portfolio is October 16th, and the exit date, which was the next rebalancing, was November 13th. The I Know First return was 4.08%, which beat the S&P 500's return of 2.45% for this 1-month time frame. Here you can see some of our holdings for the October portfolio. We had XLK, XLC, Blackstone, Parker Hannifin, and Capital One. Our AI algorithm correctly predicted XLK, in which it went 2.59%, which beat the S&P 500. XLK was also our largest holding in the portfolio. It made up over 22% of our portfolio. Next, we have XLC. XLC went up almost triple the amount than the S&P 500. This was our second largest holding, which was over 17% of the portfolio. One of the equities our AI chose was Blackstone, who went up over 13%. Blackstone made up over 5% of the portfolio. Next, we had Parker Hannifin, who surged more than 10% in this month. This equity also consisted of more than 5% of the portfolio. And lastly, we had Capital One. Capital only consisted of a little over 2% of the portfolio. However, Capital One went up 17.37% in just 1 month. This blew out the S&P 500's returns by a lot. We are currently using this combined long-only strategy with clients. Here are results with one of the clients who we started with in June 2024. Since June, we are more than 3 times better than the S&P 500. Again, these are real results and not back-tested numbers. Ultimately, this is only one of many strategies that I Know First has to offer. Thanks for watching. If you enjoyed this video, don't forget to like and subscribe. Drop your take in the comments below. Here's to smarter, AI-driven investing. See you in the next one.